Hi friends, Simit here from InformedTrades.com. Today is May 6th, 2014. Time for our daily Forex chart review. Basically, in these sessions each morning, I share the trades I'm placing, adjustments to existing positions I have on the market. All a part of our mission of helping traders learn. You can sort of learn from my mistakes, learn from my successes. We can all learn together. Of course, I'm just presenting one style of trading, price action swing trading, looking for trends, swing points in the market. We have a whole bunch of information on this type of trading as well as other type of trading, other type of indicators, markets, all at InformedTrades.com. Check it out. Share your knowledge. Register as a member. Ask questions. Set up a trade journal. Register for a demo account. We can all sort of learn together. Okay, let's take a look at the charts that I'm looking at this morning. First is gold, and of course, gold is actually I'll be incorporating. I haven't been incorporating it thus far, but I want to start incorporating it more. Taking a look at the gold daily chart, because we talk about gold a bunch on Informed Trades. It's something that I have a considerable portion of my net worth invested in from a long-term basis. So I'm not really so concerned with day-to-day fluctuations, but definitely the overall trend and the overall price action I do want to be a bit concerned with. Right now on the chart, you see an AB equals CD pattern. I discussed this a while back. It's not, I mean, I feel like the palette is somewhat legitimate or applicable so long as this low, point C, is not really substantively breached. Now, we did dip below a little bit, but if anything, that's, the fact that we have a wick and the market came quickly back above it, I think is supportive of the idea that bulls are defending this level. So that's still intact. We are coming up on the 50 and 200 exponential moving average, so this is really formidable resistance. If we can clear both these levels, so if we can close above 1325, within the next week or so, I think that really sets the stage for a lot more people to come in, and possibly we'll see if we reach a target of the 14. The market should be at around 1445 by early June. That's what the AB equals CD pattern suggests. We'll see if that's still valid. This trend, range-bound trending is going on for a little longer than the ABCD pattern would kind of suspect or project. But I still think it's valid, like I mentioned, so long as this low is not breached. Anyway, so far that's sort of what I'm thinking on gold. I'm not really trading that day to day, just a longer term outlook I have on it personally. Let's take a look at the positions I do have on in the market. Right now I've got 4 positions on in the market. Let's start with the one change from last night, which is dollar-yen. It got stopped out. Now I got stopped out of break even, so I didn't lose any money. We see that the market closed. Let me zoom in a little bit. Okay, we see that the market closed at this orange line right here. So basically April 29th, that was what gave me the cue, and perhaps I may have jumped the gun a little bit, but I thought, I have a bunch of yen positions on, let me at least move one to break even. And dollar yen seemed like the most appropriate. So I moved my stop from, which was originally here, to break even, which is now here. And then the market wasn't able to close above this. Here's a really key reversal candlestick, right? So here we know that bears are coming in and pushing price down. And now we have a big red candle here. So it closed below this level, took out my stop. I didn't lose any money. That's where I entered at. But I'm out of this trade. Now we do have some other trades on at the moment. Let's go to Canada Swiss. Okay, Canada Swiss. So sort of the same position, same story we've been in for 3 weeks now, since going back here. We're in this range. 50 prices above the 50 simple moving average, and we have a support here and a 50% Fibonacci retracement. So I still like the way this is going. Nothing really to do until we either hit this stop, and I'll lose money on this if it's hit, or if we close at or above this orange line, I can move my stop to break even. Euro Australian dollar. This is another trade I still have risk exposure on. Yeah, so we're coming up on the 50 simple moving average here, long position here. And I'm a little concerned about this because I actually see signs of bullishness on the Australian dollar in other markets. So if I do have to close one out, I'm tempted to close this out, and I was thinking about it today. But if some of the orders I have get filled, I'll close this out. Now, it's still it's still slightly above my entry point, so there's a small floating profit, nothing too meaningful, but a little bit because I entered here. Price is now here. So we'll see. I am possibly going to close this one out prematurely if some of my existing orders get filled, which we'll get to in a moment. That's Euro Australian dollar. And Euro Yen and Pound Yen are what's up next. Euro Yen. Yeah, same situation here. I do like the way this is going, but I'm not going to be able to move to break even until I move my stop from here to here. So we'll see. It's just a matter of waiting. I do generally like what I'm seeing here. I think this is a trade to hold on to. I'm eager to move it to break even, but have to be patient and wait for price to close at or above 142.02. Basically, before I move to break even, I just want to see price clear a resistance level or support level to short trade. That gives me a little extra buffer and justifies moving to break even. Pound Yen, we already moved to break even, so this trade has been de-risked. There's no risk on this trade. It's just a matter of waiting. So I have 4 trades on, 3 of which still have risk exposure. So I only really have room for 1 more trade, but I do have. I do have 4 orders on at the moment. So I've got a bunch of entry orders, and if one of them gets filled, chances are more than one of them will get filled. I'll close out, the others. So I don't want too much exposure. One of them is Aussie Canada, and this is one I put on yesterday. It hasn't gotten filled. I'm set to go long on this black line, stop at this red line here. And the rationale, 61.8 Fibonacci. We have this 50 simple moving average and a long wick candle here. So nice technical setup. Aussie Swiss is another one. And similar. So, we see, I really think the Australian dollar might be turning. And that's what leaves me a little concerned about my my long Euro Aussie position. Aussie Swiss, I have an order to go long at 81.22, stop at 80.81, target profit 83.02. So really, it's this support level which is established here, right, back in February and again back in January. So I think this support level 81.22 is meaningful, plus the 50 simple moving average not far off. My stop, I should make this line red. There we go. Okay, that's Aussie Swiss. Pound Aussie. So we have a lot of Australian dollar. Now I don't really want more than 2 trades going in the same direction. So if I'm going to be long Australian dollar, I don't want to have that on more than 2 pairs because that's just too much correlation. So like if all these orders get filled, I'm going to close out some of them right away. I'll be monitoring my account pretty closely over the next day or so to make sure I don't accidentally take on too much risk. But here's a nice short setup. This candlestick really here, beautiful. This could be a bearish checkmate. I don't think the low on on May 2nd will be breached. I'm tempted to actually even pull this stop a little bit closer. I could put this stop, maybe 60 pips closer or so. But, I figure I give myself a little extra buffer just in case. And I have a target profit here, right above the 200 exponential moving average. That still allows for a 3-to-1 reward risk, which of course is the minimum I'm looking for. So that's a really nice setup, in my opinion. Let's see if it gets filled. And dollar Swiss, this one is, so the dollar had a big move down last night. This one's not going to get filled, and I might as well just cancel it. So really I have 3 entry orders, because I'll cancel this one. Yeah, we're now 100 pips away. But the idea was to go short at 88.43. But once you have a long wick pattern like this, which is a beautiful long wick, it's unlikely you're going to get another shot at that. That's where sometimes trading on the 4-hour chart is, if you're looking at a market every 4 hours, you might be able to take advantage of this price action. But daily, by the time this long wick is complete, you logged in, the bears have already come in, and the market's already been decided. That's about it for the trades I've got on at the moment. These are documented on my blog on InformedTrades.com. That's about it for today. Best of luck in your trading, and we'll see you tomorrow. Take care.